This is trading in its simplest form. If you are bullish, buy at the low. If you are bearish, sell when price is higher. If you are in a consolidating range, you don't buy at all. If you want to buy low before price has got there, identify your range, measure your range, work out your discount zone. Inside your discount area, you're going to look for order blocks and imbalances. If you want to sell, identify your range, measure your range, mark 50% and above to discover your premium area, and inside your premium area, you're going to identify order blocks and imbalances. So here we can see price is bullish. Here is the bottom of the range. Here is the top of the range. I'm going to measure my range. I'm going to identify my discount level, which is 50% and below. And I am looking for order blocks and imbalance. There's an order block right here. So on a smaller time frame, if price now reacts higher, I would look to get in on some kind of retest to take price higher. I do this at the London session or the New York session because time and price is everything. Recycle these thoughts, understand your discount levels, understand your premium levels. Buy when it's obvious, sell when it's obvious. If it looks confusing to you, it probably is confusing. Stay away from the market. And all in all, keep things as simple as possible. The algorithm isn't actually that hard to work out because the market looks for just two things: areas of inefficient price action and liquidity. If the market is bullish and you're trading a particular session, you have to identify levels of liquidity. So for example, if this was the London session, you would be looking for an area of inefficient price action and you would be looking for a draw on liquidity, because at the start of your particular session, price is likely to sweep liquidity, react from an inefficient price action and head towards more liquidity. And all you have to do at the start of every single session is try to identify a draw on liquidity. So we can see here liquidity at the top, we can see liquidity at the bottom. Let's say on a higher time frame you were bullish and you've been able to find a higher time frame points of interest area. Now at the start of your trading session, which represents this line here, you would want price to sweep these lows, i.e. taking out liquidity, react from your point of interest area, push to the upside, giving you an entry, targeting liquidity. So on a higher time frame, I am pretty bullish. At the moment, I am looking at this level of inefficient price action here. If I go to a smaller time frame, I can see this area of liquidity. If I turn on my sessions indicator, I can also see that is the London session low. As you can see, price came into my area of inefficient price action, swept this liquidity here, targeted buy side liquidity. So all you have to do to understand the algorithm, go and backtest liquidity and areas of inefficient price action. If I had a penny for every single time I stressed over making the right decision in my trading career, whether I'm learning or even to this day, I would be a billionaire by now. And I know I'm not the only one who has these kind of stresses. And a lot of people will give you these motivational quotes about how you have to make the right decisions. But what these people don't understand, in my opinion, is you don't have to make the right decision every single time, because over time you will learn to make the best decisions with the more experience you get. When you come and learn how to be a trader, you are not going to be able to understand how it works straight away. It's just human nature. So there's a learning phase, and in the learning phase there's going to be mistakes and you're going to get stressed from time to time. But one thing you have to remember is you've already made the right decision because you've chosen this path. All you have to do now is understand that this will work for you at some point. You have to keep turning up, you have to keep practicing, you have to keep gaining that experience. And the more experience you get, the better you will become at finding the best entries in trading. And one other thing that you need to understand is even when you are 5 years deep, 10 years deep, 20 years deep, 30 years deep into your trading career, you're still going to make plenty of mistakes. So if you're not where you want to be yet, just understand that this is a process that takes time, and you are the only one that can create the legacy for yourself. So it's not about making sure that every decision you get has to be right. It's about making sure that when you've made the decision, even if you're making mistakes during that, first thing you have to understand about identifying a point of interest in trading is whether you are bullish or bearish. This is a higher time frame chart and I can clearly see this is bullish. So what I'm going to do is measure the range from the bottom to the top. I've now been able to identify that I am inside a discount area. If the roles were reversed and it was actually selling this discount area would be a premium area, but we are bullish at the moment. So now we've got our area. This is where we want price to come back to. Now inside this area, I am looking for a few things. Order block, imbalances. There are other things such as breaker blocks, inverses, things like that. But trust me, just stick with these two for now, just to keep it simple. So what can I see inside here? I can see we've got area of imbalance there, area of imbalance here, order block right here. So now I'm able to identify key points of interest. All I have to do is wait. So we are on a smaller time frame. This is our imbalance here. There's another area of imbalance here. This line is our order block. You can see price came right into this order block, swept all of this liquidity here, pushed to the upside above all of this structure here, leaving a nice area of imbalance, which is going to be my entry. As you can see, price came right into my entry, reacted to the upside, all because we were able to identify a key point of interest on the higher time frame.